It's time now to introduce Philip Hine, the National Program Manager, Superannuation. Philip, welcome.
Thanks, Tracy.
Now, Australia, as we know, has an ageing population. In fact, by 2050, almost 1 in 4 of us will have reached retirement age. And superannuation is therefore more important than ever. The ATO will be implementing some changes over the next few years which will make it easier and simpler for Australians to save for their future. But I wonder what the implications are for tax professionals.
These changes affect both individuals and companies that employ people. Tax professionals need to know about the changes so they can give their clients good advice about super matters.
Of course. And how are the changes going to help people to save for their retirement?
People are going to have more money paid into their super accounts by their employers. Currently, employers are required to make super guarantee payments for eligible employees equal to 9% of their employees' salaries. This rate is going to increase by 0.25% on the 1st of July next year, and over the following 7 years it will gradually increase until it reaches 12%. From 1 July this year, we'll also introduce a new program called the Low Income Super Contribution. It'll help eligible low-income earners who often struggle to put enough into super to fund their own retirement. The payment will go directly into people's super accounts. It will be 15% of the concessional super payments made for them by their employer, up to a maximum of $500.
How do people get access to this payment?
There won't be an application form for this payment, and people who don't need to submit a tax return for other reasons can get the payment without lodging a tax return. People who do need to lodge a tax return may need to complete the A3 adjustment return labels, particularly if they have complex tax affairs. For example, people who derive the majority of their income from a partnership that's carrying on a business. People should check that their super fund has their tax file number, as they can't get government super payments if their super fund doesn't have their tax file number. They also have more money taken out of their super for tax. The government's also making sure that older people who are still in the workforce don't miss out on getting superannuation payments. From July next year, employers will also need to make super guarantee payments for their eligible employees who are 70 or older.
You mentioned earlier that these changes don't just affect individuals, that employers are going to have to make some changes as well.
Yes, Tracy. Employers will be making the superannuation guarantee payments on behalf of their staff, so they need to know how much to pay and when the rates are changing. In a lot of cases, they'll need to know well in advance so they can update their payroll and accounting systems. They can use the super guarantee contributions calculator to work out how much super they need to contribute for their workers. We'll update the calculator as the rates change. They can find this calculator on our website in the employers section.
Now, there are in fact a great many self-help tools on the ATO website for businesses and individuals, and one of those is Super Seeker. Just explain what Super Seeker actually is.
Super Seeker is an online service that helps people keep track of their super. It's been around for a little while, but we've just made it much better. Over the next few years, it will bring all of a person's super information together in just one place. From 1 July, it will display a person's current active accounts, any lost super. These are the accounts where funds have lost contact with their members, and details of any other ATO-held super. People will be able to start the consolidation process of their accounts online so that they save on fees. It's a great service, and I'd be really happy if people would give advice about super, encourage their clients to visit our website and click on the Super Seeker link on the right-hand side of the screen. Using the Super Seeker tool to search for lost super could be the most profitable few minutes of a person's day.
Indeed. Are there any other things that tax professionals should be telling their clients, do you think?
Well, people who put a lot of money into super still need to be aware that there are limits on the amount they can contribute without incurring excess contributions tax. A person's super contributions cap depends on the type of contributions they're making. From 1 July this year, the limits will change. More detail on the contribution caps is available on our website.
And what happens if people exceed those limits, Philip?
From 1 July this year, people may be offered a reprieve if they have paid too much into their super as concessional contributions, like super guarantee or salary sacrifice contributions. If they have exceeded the concessional contributions cap by $10,000 or less, we'll offer to have their excess contributions refunded and taxed at their marginal tax rate. Now, the offer is only available for the first time the concessional cap is exceeded in 2011-12 or a later year. Tax agents will have the ability to accept the refund offer for their clients using the electronic lodgement service.
And where should people go if they'd like to access some more information about the super changes that you are implementing?
I'd encourage them to go to our website and search Changes to Super.
I think it's true to say that internationally Australia is recognised as having one of the best retirement income systems in the world, but most Australians are still not saving adequately for their retirement, are they?
Yes, that's right. And with an ageing population, this is creating long-term pressures on the affordability of Australia's pension system. Many Australians, especially younger people, are disengaged from the super system. They're faced with multiple accounts and long saving cycle for their work life, and most struggle in tracking, understanding and changing their super arrangements.
The Cooper Review, of course, identified a number of areas for improvement in Australia's superannuation system, didn't it?
Yes, Tracy. The Cooper Review identified inefficiencies in the back office administrative processes supporting the superannuation system. Manual processes, checks and inconsistent practices are driving unnecessary cost and complexity in the system, often working against members' best interests. So to address these concerns, the government has introduced a package of measures known as SuperStream.
Can you explain exactly what SuperStream is then?
SuperStream is a package of measures designed to increase the use of technology and enhance the efficiency of the back office of superannuation. One of the core elements of SuperStream is a new data and e-commerce standard that will provide a consistent and reliable electronic method for sending linked data and superannuation payments.
And what are some of the key features?
The key features of the standard include a consistent and simpler way of making contributions and rollovers using standard terms and message format. A mandatory system which ensures a level playing field and enables end-to-end efficiencies. This will ensure employers and funds are required to send and receive data and payments in the same format. And a number of ATO enabling or web services will also be available to allow checks of member of identity and fund details.
So what is the, if you like, the payoff for funds and for members?
Now for funds, it means fewer data quality issues, easier data money reconciliation, fewer lost accounts and unclaimed monies, and in the long term, lower overall processing costs. For members, it means less time out of the market for members' funds and fewer lost accounts.
And what about for employers? Are there benefits there as well?
In the current environment of choice, employers have to deal with different data and payment requirements for various funds. This results in additional administrative burden and complexity for employers. The new standard reduces this administrative burden and makes it easier for employers to send superannuation contributions. They will only need to follow one standard when sending data and superannuation payments, and electronic messaging hubs will assist in getting contributions to the right fund.
Philip, when does all of this come into play?
Legislation is expected to pass Parliament by 30 June this year. It will mandate the use of the new standard in progressive steps. It's anticipated that by July 2013, all funds, including APRA-regulated funds and self-managed super funds, will be required to process rollovers in the new format and be ready to receive any contributions in the new format. From July 2014, the focus will shift to large and medium employers with 20 or more employees, and they will be required to send superannuation contributions in the new format. From July 2015, Small employers with less than 20 employees will be sending contributions in the new format, subject to further consultation on impacts.
So what is this going to look like further into the future?
Employers will need to get system and processes in a standard-ready state so they can execute contributions data and payments using the new standard. Each contribution cycle, the employer will send a standard electronic file over the internet to each fund service gateway for processing. Electronic payments will be sent via the banking system to the destination fund. A unique reference number will link the payment and data file for later reconciliation. And before the file is sent, an integrity check will occur to ensure the data is correct. The receiving fund checks the incoming file using automated integrity checks, and if needs be, sends automated error messages back to the employer, indicating the exact source of the error. Finally, reconciliation with payments and allocation to member accounts can be automated as well.
All right, so this means in many cases then no mail rooms, no manual matching, no waiting days for events to coincide.
Yes, Tracy, a great move forward.
So what do agents need to do now to be ready for this change?
My most important message to agents today is start thinking about what this means for their clients and the services they offer them. If they have relationships with self-managed super funds, they will be impacted first, that is from 1 July 2013. Are you in a position to assist them with receiving electronic rollovers and employer contributions a year later? Or can you recommend other business partners they should work with, an administrator, a financial institution they bank with, or other service providers? For clients who are employers, they have longer to get ready. You may be able to assist them directly with sending contributions or recommend payroll providers, clearinghouses, or other service providers they can work with.
All right, and where would you direct agents who are seeking more information, Philip?
Agents can visit any of the sites shown on this slide for further information or can talk to their industry association.
Okay, just finally, anything else that you would like to add, or perhaps a final word of advice?
Start finding out more about the changes. Agents need to decide whether they want to play an active part in this service opportunity for their clients. If agents have clients who are still using paper and cheque-based processes, investigate transitioning to electronic funds transfer as a first step. On the data side, they may need to look at options for upgrading their in-house systems, upgrading to a compliant payroll package, using a clearinghouse such as the free Small Business Clearinghouse, or working with a range of other possible service providers.
Okay, and on that note, Philip Hine, thank you very much for joining us today.
Thank you very much, Tracy.
Philip Hine, National Program Manager, Superannuation. And that concludes our webcast for today. I hope you have once again found it both informative and useful. We are planning more webcasts for you this year, so as I always say, we would like your feedback, particularly on those topics about which you would like more information. So on the web page from which you accessed this webcast, you'll find a feedback link which details the type of feedback we're keen to receive from you. So please email your thoughts, your suggestions for future topics, or any questions that you'd like to be considered for inclusion in our next webcast to taxpractitionerpresentations@ato.gov.au. Thanks for watching, and I'll see you next time.